Testing. JB here. September 7th, 2021. Hope everyone had a great extended holiday weekend, Labor Day weekend. I'm just coming into this week. I was trying to spend some time to put some due diligence on the JYNT. JYNT is the ticker. I just didn't have time. I'll hopefully this week in the next couple of days I'll put together some more detailed analysis on why I think it's 150, 160, probably over $200 in the next 6 to 12 months. I guess I'll start with that. The more I think about the joint, the more I think it's in comparison to some of these other less sexy names, right? So normally, if you're looking for a growth name, you're looking at the tech space, cloud space, even some of the biotech names that have some potential blockbuster drug news that may spark shares. Those are names that you would typically look at. And then when you look at the joint, you're like, wow, it's a chiropractic office. There is no bull case really on that name. You think it's very, not a sexy name. The growth is probably not there. It's a mature market. But then you look at what they're doing. They only have 1% of the market share. They have 500 locations. So you start doing the math. 2% equals, no, they have 500 locations. 2% is 1,000. Once they hit 1,000 in 2023, then they're looking to scale out via marketing. And then you start looking. I'm like, this is like the CMG of adjustments. This is the CMG of chiropractic care. And I did some comparisons to other chains, or at least other sectors that might have some kind of penetration issues. Dentistry is certainly the one where there's actually I think it's 10 or 15% of that market is chain based, and only less than 2% of the chiropractic market is chain based, meaning it's probably individual practices. So there's opportunity. So I was trying to do my little write up, as they continue to scale out. So when the stock was $50, maybe it priced in a probability of, flat growth or I wouldn't say bankruptcy, but financial issues. And then as it continues to have chains open up and shows profits quarter after quarter, then the stock is kind of pricing that out, and now it's pricing on hyper growth, right? So if it continues to do what it's doing, it's like a 250, $300 stock in the coming months and years. So I'll continue to look for that one for options to play for upside. Still have 110, 120s. I'll hold those, and I'll probably look for some Octobers. I think they opened 150 or 160 strikes this weekend. So probably some names, some options I'll be looking at in the coming weeks and months. Not, on the flip side, not a liquid name. There's going to be people who are in much lower than where it is now. So when you see sell-offs, we saw that after its earnings, that it pulls back, and it's like, oh, there's no news, there's no downgrade, there's no catalyst. It's people just taking profits, and then you're in the options. It's not a good thing, right? So I'm sure that's going to continue to happen over the next couple of months. The stock will have gyrations, but I think those gyrations will eventually lead it to 130, 140, and 150 plus. And then again, at some point, I'll have some a nice detailed post out so you can kind of wrap your head around what my mind frame, my mindset is on the name and why I think it's going to go that high. All right, so that's number one. FUBO. I'm not going to go too much into FUBO. I added some calls today. I had FUBO calls back when it was 13 or $14, and I think not many knew about FUBO. FUBO, it's it's a platform pretty much like YouTube TV or Hulu TV Plus or these streaming services that allow folks who are on broadband to watch TV. So the margins aren't there, right? Because if you're providing that kind of service, the margins are, it's cutthroat. But then FUBO TV is pretty much one of those, I don't know how to put it, but they're focused on sports. So if you're not familiar with Europe or cricket and soccer over in Europe, you're going to miss the boat, because FUBO, that's where their growth came from, because they provided all these soccer matches and cricket matches that nobody had access to. Not only that, you just pay one fee and you can watch any of those at any time. You can DVR them. So huge, that was kind of their value proposition. And then as it rolled to the U.S., and I mentioned this a couple of years ago, and one of the reasons FUBO came to my attention was because there was a boxing match. I forget, it was like Wilder versus Fury or one of those matches. And then sure enough, I look at FUBO and it was like $14. I'm like, this is going to go much higher than where it is now, just based on the fact that it's undervalued. undiscovered. People don't realize that it's a publicly traded company. It had just kind of I don't know if it did a SPAC transaction, but excuse me, but I thought it was undervalued. So I played FUBO. I think it was 1750 calls, made some money, and then kind of took it off the watch list for the time being. And then you have all these pumpers. All these pumpers came in. Some of these folks were saying, "Oh, it's going to $200." Stock, I think it went to $50 and it came back down because they're trying to compare it to Roku. The difference with Roku is their cost structure is completely different. FUBO, it's not like they own the content. Roku is just a third-party aggregator, right? So they have their platform, whether it be software or hardware related, plug it into the TV, or you have the app on there, and then their cost is gone, right? And the only money they make on that is advertising, or if people try to sign up for Netflix or HBO Max or all these other services, they make a small fraction on that. And then they have the Roku TV channel, which is subsidized by advertising. FUBO TV is completely different. But the difference between FUBO TV and Roku is that FUBO TV is trying to find another area to monetize, and that'd be the gambling side. So if they are, which FUBO TV is, a very sports-based a programming channel, if they're able to incorporate the gambling side of it, where people can bet on the quarters, the halves, the entire game, players, so on and so forth. I mean, you have to look at the possible upside possibilities for FUBO. I wouldn't say it's limitless, but there's certainly opportunities for upside. And then you take a look this Friday, they got approval from the Arizona Gaming Commission to do, mobile. They received a license for mobile event wagering, right? So just impressive. And, thing with DraftKings, and back when DraftKings was $14 or $15, and I had calls on that before it did its ticker change from DAC to DKNG, DraftKings has done so much legwork in terms of lobbying and getting all these states to change their gambling rules and regulations to allow them to do fantasy football, fantasy baseball, MMA, all these other activities. It's kind of paved the way for gambling to be accepted across the United States. It's going to happen at some point, and FUBO is kind of front and center now. That's taking advantage of this. I hate to say, it's like DraftKings has created this. They're the big boat that's created this wake, and DraftKings is just sailing behind the wake. But I mean, that's kind of where it's at right now. DraftKings has kind of done the legwork, and FUBO is just going to take advantage of that. So we'll see what happens. I got some weekly calls. At some point, I think I put it on a watch list. The 35s for next week looked interesting on a risk-reward basis, so that's kind of the thought process there. Possibly adding those. 32s looked interesting just because it started to break over 30. So that's FUBO. It's one of those names, I think, if they're able to execute, it's a 50, 70, 80, 90, $100 stock in the coming weeks and months, because I think they cater to a sector that has really not been, taken care of, right? And so if you're watching sports and you want to gamble on sports, and you're in the United States, you really didn't have that capability, right? You just sat there and maybe you found, a friend who knows a bookie and you could put in some side bets. But now that as, some of these restrictions come away and states start to realize, hey, people are going to gamble regardless if it's legal or not. They, just similar what happened to marijuana, they're going to, some of these companies are going to certainly be able to take advantage of that. So that's FUBO. That's why I added those this morning. PPG, right? So take a look at Sherwin-Williams. PPG, they don't do just paint. Was it Glidden? I think Glidden's their paint product that they have in Home Depot and Lowe's. They announced guidance, or at least they removed guidance. They lowered their revenue outlook, and then they raised their cost outlook, meaning it's like a double whammy. Not only then they're not going to meet their revenue guidance, they're going to let's see if I can pull it up here exactly so I can get the exact monetary values on here. Let's see. Yeah, sales volume below expectations. So they're going to miss revenue by possibly $275 million. and their costs went up like 70 million. So it's like a double whammy. Not only are you not going to hit revenues, but your costs are going up, so you're going to get destroyed in EPS. So the stock was selling off, and last time this happened, Sherwin-Williams got destroyed too, and I'm surprised that it's kind of holding up here. Crazy stuff. So I'm not sure if we're going to get puts here on Sherwin-Williams. Maybe I'll wait to see what happens at the end of the day. But you have to think this is not a couple week or couple days situation with these with in regards to paint. What's the other products that PPG does? But they talked about logistical issues, supply issues, demand issues, everything. But I guess, sometimes you look at these situations where they do that and it's kind of like pull the Band-Aid off, get all the negative news out of the way and the stock can rally. But this is not the first time with PPG. So with Sherwin-Williams at all-time highs, you would have to think opportunity to play for downside. So that's that one on Sherwin-Williams and PPG. AVAV, Aero, let's see if I have it up here. Why is that not coming up? There it is. Environment, their drones, they've had some great orders with the U.S. government and some of these other governments. I'm trying to think the last good deal they've had. Let's see. Needless to say, not last earnings, but the earnings before, the company had a really strong report and the stock just went, did it go to 130? 140. Actually, at the start of the year, I think there was a buyout or acquisition. Companies are positioned well, no debt, lots of cash, certainly an opportunity. See, you take a look at the charts, kind of tight here. So any strong beat and raise, the stock probably goes nuts. Reports after the close tomorrow, so I'll probably wait either before the end of the day today or tomorrow to add some calls there. It's not a name. I've traded this one quite some time because you have to think the sector of drones it's not like it's going away. So there's not many companies who do what they do. Especially it's a small cap, so maybe it's an acquisition target at some point. So that's why I continue to look at that one. Yeah, crazy stuff. El Salvador, right? So it's like, back in 2012, 2013, I did a little post on Bitcoin. It was like $200 and it was $800. Everybody thought it was a fraud. It's this big, money laundering opportunity for drug dealers to use this currency to hide transactions from the government or what have you. So it kind of got folks to shy away. And now all of a sudden it's at 50,000. Well, actually it dropped a lot today. And all of a sudden these governments are saying, I'm going to buy Bitcoin. Like, it's the craziest thing. It just kind of shows you it's the same story with a lot of these companies over the years. Amazon, Netflix, Facebook to a certain degree. But gosh, when Netflix was 40, 50, 60 bucks, it was, Carl Icahn was in at 70 bucks. And everybody's like, oh my gosh, it's the biggest short. There's no moat around this business, blah, blah, blah. And then it goes up and he sells it like 300 bucks. And then it continues to go. They have a split. It keeps going. It's just kind of, you got to assume people just don't understand it. I think I wrote a post on Netflix back in 2012. It's like I was standing in a supermarket line and then you start hearing people about, talking about their queue on Netflix. And back in the day, there wasn't as much streaming. So people would talk, oh, my next queue on Netflix is, I have CDs coming for The Sopranos season 4 or whatever it is. But then the big tipping point for Netflix, and I think a lot of these companies over the years, as you start to look at when you make the big money, is when they have the tipping point. And Netflix's tipping point was when they went from the DVD to streaming. The stock was 30 bucks for years, and then it started to take off. So I'm not going to sit here and argue about some of these. Some of these things that had tipping points, but his cryptocurrency, and you look at it, it's like Bitcoin was the tipping point, 800, and even it went up to 10, then it was down to 5, then up to 20, then down to 12. So it's one of those things that, if you just say, okay, this is my long-term horizon, this is what I'm going to get, I'm going to go boom or bust, and go from there, and maybe that helps handle some of the volatility. That's it. What else did I have on the watch list this morning? Oh, Spotify, right? Spotify had an upgrade this morning. You take a look at the chart from its announcement of a buyback, and that was the bottom, mid-August here. Take a look at this huge move off the bottom on Spotify. Great story. You also have this backstory about Apple, right? So Apple, everybody's, even Elon Musk is talking about the monopoly Apple has on the cost on the App Store, right? If someone pays for a subscription or needs to renew or whatever, Apple Store is going to get 30% of that. And now Apple, I guess in the next month or so, is going to allow you to do off their platform subscriptions, which on one side, probably not the best thing for Apple, but it probably removes them from the target of regulators in regards to monopoly. And then on the other side, you have a company like Spotify and Spotify still thinks this is not enough for Apple, but Spotify is certainly going to be a benefactor from this. So interesting stuff. So anyway, I've been watching Spot. I had the lottos a couple weeks ago. I'll probably, it's up nearly 3% today. I'll probably at some point I'll visit this week, only for session week. And then you have Twilio. Twilio's really tight right now. You take a look at the chart. 364 was the last, trading between 355 and 368. I have to think at some point this one's going to take off too. Right at the 200 days, 359. 50 days, 374. If it gets any kind of bid, the market finds some support. Probably heads near 380, 400 bucks. Tight Bollinger Bands. Another name I'll continue to watch. And then last but not least is Sam. And lots of questions on Sam over the last couple of weeks and months. I have to find a link. I think it was 120 or so when I got bullish on the name. They had an accelerated buyback program, huge earnings. Not, needless to say, stock went all the way up to 1,400 bucks over the last 6-7 years. And then that's it. Trulia, I guess their big, sparkling seltzer brand has, I guess, plateaued. So there's slowing growth there. Their recent acquisition, I guess, is not being looked on too well. And the stock has just been on it's like a ski slope on a great winter day. Let's see if I can get it down here. Yeah, 551. At some point, that thing's going to take off. Whether it's a $100, $200 squeeze to the upside. So I'll definitely be watching that one for possible call plays. The unfortunate thing is Sam only has monthly option expirations. So it makes it a little more difficult to trade if you're looking for some speculative trades. I mean, you're going to need some huge moves on some of the calls. I looked this morning, but for example, September 17 strikes, they expire in 2 weeks, nine trading days, 8.5 trading days. You start looking, let's see if I can pull it up. So let's say, it's at 559 right now. You want to go 650 is not bad. 40 by 80 if you can get 60s. So one of those names I'll definitely be watching in the coming days and weeks to play for upside. And I think that's it, folks. I'll try and get back on later. Let's have a great day. Rock and roll.